we have got an emergency update for you here. The crypto market faced a massive $1 billion Bitcoin bloodbath in these last 24 hours, and Elon Musk isn't the only cause. Everyone is in a state of panic right now, but why is the market crashing? And more importantly, what should you be doing? Buying, selling, holding? I'm not going to come to any premature conclusions here. I did some thorough research to understand all the factors contributing to this crash. There are 4 major catalysts that have contributed to this crypto bloodbath. I'm going to go through those one by one, explain what their impact has been, and explain if each individually is going to be pulling the market down further. Catalyst number 1. SpaceX Bitcoin. This is SpaceX's holding, written down as $373 million worth of Bitcoin. The company led by Elon Musk reportedly sold a significant portion, or maybe even all, of its $373 million worth of Bitcoin holdings. The news here was reported on August 17th by the Wall Street Journal, and that, as you probably know by now, precipitated a pretty sudden drop in Bitcoin's price. Let's look at some opinions here. The co-founder of Dogecoin weighed in on the situation, actually finding it amusing how the past sale of Bitcoin by SpaceX is causing a crash at present. My opinion personally, this is probably just FUD, fear, uncertainty, and doubt for no major reason. Businesses often write down assets for tax purposes, and beyond that, we don't have any on-chain movements or concrete reports to confirm the selling of BTC. So we should not panic when it comes to this one, in my opinion. But the reality is, like it or not, Elon Musk has a lot of influence. The market analyst Josh Gilbert from eToro, he attributed the price drop to the influence of prominent figures, in this case Elon Musk's. And Elon's involvement in the crypto space has been known to impact prices, and his reported Bitcoin sale contributed to downward pressure on the price in this case. Again, my take, Musk may well have caused this panic, but there's another technical reason here. Bitcoin actually saw the largest liquidation since FTX's collapse, with long liquidations as big as, get this, $400 million. Catalyst number 2 is that there's been a sentiment shift. This is another potential factor contributing to the price drop, which was the rapid shift in market sentiment. Concerns arose very quickly from expectations of future interest rate hikes by the US Federal Reserve. And the shift in sentiment, combined with uncertainties in global markets, has contributed to a broader pullback in risk assets. My personal take is that BTC prices have acted kind of agnostic to Federal Reserve rate hikes, at least for the past few iterations. But that being said, the sentiment towards the upcoming BTC halving has been kind of neutral. But on the flip side, then again, there's this kind of latent, dormant optimism, if you want to call it, given that the SEC, I think ultimately and imminently, will be approving some kind of Bitcoin spot ETF. Catalyst number 3 is that more liquidations have resulted in this monumental cascade of selling. Here's my take. Bitcoin dumping to about 26,000 seems nothing more than a massive liquidation. This is concerning though, as we see the perpetual funding rate going negative. And this is indicative of further price drops potentially. Almost $1 billion worth of open trades have been nuked. And so we should be careful as the market is extremely volatile right now. We have some additional reasons here, some honorable mentions in terms of what's selling big. Whale-initiated selling pressure. So a significant factor, as always, behind the abrupt price drop of Bitcoin is large whale activity. This is executing a substantial sell order usually. This triggered a chain reaction leading to further selling and putting pressure on derivatives markets. There's also derivatives liquidations. The Flow Horse, a pseudonymous derivatives trader, suggested that the initial large sell order had a cascading effect on the market, which of course resulted in liquidations of over $427 million worth of Bitcoin long positions within just hours. And over the last 24 hours, more than $822 million in liquidations occurred for traders who had open long positions, which also bet on crypto assets moving upward. There's also the Ethereum ETF speculation. The same trader indicated that various expectations for the decline were speculative in nature. Notably, they proposed that a major fund might have strategically sold off their Bitcoin holdings to prompt a domino effect that would lead to buying Ethereum. The assumption here was fueled by reports of the SEC potentially approving an Ethereum futures ETF around the same time as the market drop, although this is highly speculative. On-chain data analysis revealed that significant Bitcoin holders increased their spending activity both before and during the market sell-off. However, this behavior, while noteworthy, was not substantially enough to reverse the downward trend. And then the fourth major catalyst here for the overall market dump, the bankruptcy of Chinese property giant Evergrande. The Chinese firm recently filed for bankruptcy protection under Chapter 15 of US bankruptcy law. So let's talk about the impact of that on the Chinese yuan. And spoiler alert, it's had a devaluation effect. So Tina Teng's perspective, Evergrande crisis disregarded. She's a market analyst from CMC Markets and did not consider the Evergrande crisis as a primary cause for the recent swing in Bitcoin's price. Her view diverged from the idea that the crisis had a significant impact on the cryptocurrency market. And then there's Marcus Thielen's insight. The head of research at Matrixport, he proposed an alternative explanation and suggested that the risk of a devaluation of the Chinese yuan might have played a pretty pivotal role in the market downturn because the Chinese yuan's current weak trading level is comparable to 2007, which was highlighted as a significant macro risk factor. Thielen drew parallels to past events. In August 2015, for example. That's when China devalued their yuan, and during the following weeks, Bitcoin prices saw a decline of 23%. However, after the initial dip, Bitcoin eventually rebounded, actually finishing the year with positive growth of plus 59% from the level of the devaluation. The historical comparison actually suggested that a potential Chinese yuan devaluation might have contributed to the recent Bitcoin sell-off. Overall, while Tina Teng dismissed the Evergrande crisis as a primary factor, Marcus Thielen's perspective emphasized the impact of a potential Chinese yuan devaluation as a pretty significant macroeconomic risk affecting Bitcoin's recent price movement.